Hello, everybody. This is Michael DeGioia and the Dash Trader Newsroom. Topic of the day is, has inflation finally passed, or is this just a pause before the summer? My name is Michael DeGioia. I'm the Director of Education here at Dash Trader, and I'm a licensed professional. I'm joined here by my co-host, Jill Molandrino, Global Markets Reporter from NASDAQ. Jill, how are you?
Good, doing well, enjoying the spring weather finally.
Fantastic, thank you. Great to have you here as always. Too bad you're in the Times Square market site instead of enjoying this beautiful weather we're having. But let's jump right in. The CPI comes in at 0.01, less than expected. The expected number was a 0.04. The big question on everybody's mind is, has inflation finally passed? Have we peaked? Looking at this chart that we're showing, it kind of looks that way.
Yeah, Mike, it does. And you could tell by the way the market had reacted. You would think that if we got better data points, that the market would move higher, thinking that the Fed's going to shift its policy. But the fact that it kind of was like, it seems as if the market, being a discounted mechanism that's 6 to 9 months out, it is pricing in, okay, we think we have hit the peak. You're also seeing it in the labor market as well, right? So those are the two biggest things, or, the Fed's mandate is keeping inflation in check and a healthy labor market, but we're seeing a little bit of coolness in the job market as well. Nothing scary like mass unemployment, but you are seeing like that peak out as well in terms of demand and wage growth. So it all the data seems to point to it, and the market reaction seems to point to it.
Yep. When and that is actually what we're going to talk about on the next slide, is that the yield curve inversion indicate that dark clouds are ahead. So the Fed has a couple of economic indicators that we show here on the screen, and you can see here the one on the top is the Treasury term 10-year bond interest rate and the 3-year T-bill rate. And you can see that there's been a big dip, and as that has dipped, or the yield curve has inverted, you can see the Fed U.S. recession in the next 12-month indicator spike to the upside. So the Fed indicates that the U.S. economy is heading for a recession in the next 12 months, which is exactly what the Fed was trying to induce with the very consistent increase in interest rates. And on this next slide, you can see that we have the recession area kind of highlighted in like kind of a grayish tint. And you can see that we've kind of come up into the area where it was the last time the Fed started to hold steady before a recession set in. So, judging from this chart, it does look like we may have hit the point. Now, the big question on everybody's mind is, what if inflation returns? So what are your thoughts if inflation, like next month on the April number, shows signs of heating up again?
I don't think they're going to shift course and cut rates, certainly in the near future. They do not want to make the mistake that they had when they were talking about transitory, which of course nothing was transitory, and then they had to revert and restrict activity as quickly as they did. That's why we saw rates jump 500 basis points. That's why we saw activity really tighten up. So I don't think they're going to do a quick reversal. If the data continues to get better, or if it gets worse, will they raise? I don't know. I think, kind of what we're hearing now and what we're seeing in Fed funds, they might pause in May and continue back in June, but I don't think you're going to see a policy reversal. They're not going to make the mistakes of the 70s and 80s. They have been very clear about that. So I don't think you'll see a massive policy shift.
Yeah, no, I think that this chart concurs with what you're saying, is that what you'll probably see here is a pause, because last time we got to the point where the economy started indicating that it was slowing down. Now, albeit this was a long time ago, this is going back to the prior financial crisis of 2008. You could see the Fed drastically raised interest rates, almost a measured move to what the rate hikes were going into this current period of time. But needless to say, you can see that the Fed just kind of paused and went sideways as inflation. They watched inflation. They watched the response of the economy. So The Fed watches what is the U.S. Federal Reserve going to do now that inflation has dropped in March. I think that the general consensus is that we're going to see a pause, not a rollback. And if a pause come, I think that the market will rally on a pause. If there's another rate hike, obviously that would be kind of considered negatively if they raise it another quarter of a basis point. As you can see here, we're not quite up to the same level that it took to the last time to bring on a recession. And then, of course, the market was kind of steady and stable sideways until the recession set in. So, what is the Federal Reserve going to do now that it is topped out? I think you and I both agree that we're looking at a possible pause, and the Fed will wait and see. And that brings me on to our next topic that we hear a ton about is we've been hearing all about AI. And today, Amazon moves to get into the AI space. What does that mean for the rest of the sector? And really, in a more general sense, Jill, you're much more cued in on this, than I am. But is AI as big of a game changer as everybody says it is, or is it a little bit of hype like we've seen in the past for some other technologies?
Right. What's so interesting is that AI has been around for quite some time. It's just that really, November 2022, and we started talking about ChatGPT more, that it's really made its way into the mainstream. But the fact of the matter is that AI, machine learning, and these other technologies we have been using, whether we are aware of it or not. I mean, when you think of Alexa, when you think about the way you interact with your smartwatches and so forth, there is a component of AI into that. I think just like, during .com, during blockchain, there's always going to be a way to attach this company does AI. I can see through the pitches that come in for the show, everybody's finding an AI angle. I think what
Yeah.
you're going to see in any hype cycle is the money's kind of going to go all over, and then um, the outliers will start to fall out, and then you'll see really what this looks like going forward. My biggest concern is a little bit off topic from stocks, but how this is going to be regulated from an ethical perspective. It's such a subjective thing that if we have challenges with data privacy, content moderation, and in a Web 2.0 world, if you will, when you think of the technologies that power Web 0.3, what does that look like? How are we protecting ourselves, users, companies, governments when it comes to regulation? And I think that is really what the conversation is going to evolve into, because the horse is out of the barn with what's being done with AI and related technologies. So I really think that while we're in this and we're looking at it from a market perspective, a stock perspective, investing perspective, what this will mean for our everyday lives is a very important part of this conversation.
Yeah, I think you and I have seen this many times. Like I just always go back and think about, like we all have smartphones, right? But certainly you and I remember Palm, right? Palm, which was bought out by 3Com. So like, Palm, although it was really, really cool and everybody was whipping out their stylus and playing with their Palm device, it really, that technology didn't come into fruition until 2007. Palm came out in 1998, 1999. 2007, Apple rolls out the first real smartphone, and that really was the total fruition of Palm. Now, going a little bit further, then the regulations start, right? So everybody has everybody's chat GBT crazy, right? I mean, that's everybody's talking about how this is revolutionizing this or revolutionizing that. But then the regulators set in and they come in and they start to tone down the technology. And we always see that every single industry that we go through, we see the regulators tone down the technology. And obviously there has to be some rules put in place, just like the internet turned out way different than we all expected it to in 1998, 1999, when no company made money. I think by the time the internet finally kind of got fully accepted, it ended up being a very different place than all of the pioneers of the internet thought it was going to be. So in my perspective of this, everybody is talking about AI, but probably the devil in the details is yet to come for AI.
I would
So
agree with you there.
yeah, and in terms of like a big company like Amazon moving into the space, they're releasing some new kind of Amazon cloud service. we're not. I don't think it makes a difference. I think that the big threat in AI are some of these small upstart technology companies are probably the big. This is the problem with technology, is that any small upstart company, a good group of technologists could come up with something that could revolutionize the entire space. So I don't necessarily think that the big players have that much of an advantage, except they can buy the small players.
Right. And, and that's why a lot of these small players come into existence. For example, cybersecurity is a great example of that, because there's over 4,500 companies, and a lot of them basically provide technology as add-ons, as layers of security, whether it's multi-factor, two-factor authentication, and so forth, with the hopes that larger companies, like in Okta as an example, there's a number of companies that support Okta authentication will, and rather than I'm choosing Okta as an example, rather than using building an organic unit to support that. If the technology already exists, then they use it to absorb it into the companies. And
Yep.
that's been the case for throughout technology,
Yep.
since its existence. So
So a lot of times big companies create infrastructure, small companies create innovation. And I
yep.
think that that's the interesting part. It's going to be the small, it's going to be the small to medium sized players to watch, is where the biggest upside will be. And that the bigger players, the Amazons, the Microsofts, those will be the ones with the cash looking to devour some of these small, innovative, medium-sized tech companies that have innovative technology that help build out AI. That's, for me, what I've always looked for as a trader and as an investor.
Yep.
So I'm glad we agree on that, Jill. I'm going to jump to the charts. I thank you so much for being here, as always, and I hope you have a wonderful weekend.
All right, you too. Take care.
All right, take it easy. Bye-bye. All right, I'm just going to fire up my Dash Trader and transfer over my screens. Give me 1 second. So here we have our Dash Trader Pro, and I'm just going to bring up, what's going on in the markets. First things first, we always like to take a look at the market from a perspective of the SPY. So the SPY is the broadest index in the markets. It's the 100 largest industrial companies, and technology companies and financial companies and oil producers. It's a very broad-based index. And although we have had a kind of secondary spike to the upside, I mean, the key resistance level to watch for is right here at the 418 level. This is the 418 level here on the SPY. And you can see here that we have kind of a little double top forming. And the double top is kind of, we kind of pulled back. We tested the 10-period moving average. We rejected it and moved higher. Now, this is kind of a slowing of momentum pattern, and it doesn't definitively say that we're ready to ignite a new move to the upside. So there's no guarantee that we're going to be moving to the upside, just based on this pattern. Now I'm going to add in the MACD, and I'm showing you how to add in the MACD here. You just go into your configure studies list, and then just move it over. Now the other one I want to put in here is the CCI, which is the Commodity Channel Index. Now notice I just added them onto this chart, and it just looks like a bunch of spaghetti. So what I'm going to do is I'm going to take them out. Okay, so we're going to take them out, and I'm going to show you why it did that and how to correct that problem. So you just right click and you go to chart area, and I'm going to put one chart area before, add a new area before, and then I'm going to do add a new chart area after. And here we go. I'm just going to move this up a little bit to give myself a little bit more space. Now, I always choose these two indicators when I'm looking at, daily charts on the weekly, and I'm just going to hit configure. Actually, I'm going to go back to study config. And I'm just going to add the CCI on top. CCI indicates whether a market is overbought or oversold. And I'm going to do study config, and I'm going to put the MACD on the bottom. Now, the MACD is a lagging indicator. CCI is a leading indicator. So MACD, the one here on the bottom, is a lagging indicator. Actually, I put in the RSI. So let's take that one out. Did that just by accident. So you got MACD. So I did it again. Remove. So I'm just going to put it here. So here we go. So there's our MACD, the lagging indicator, and the CCI, the leading indicator. Now, what we see here is that the CCI has had a 1. We made a new low. That was deeply overbought, and then it led to a sell-off. Then here we have, again, deeply overbought, led to a little sell-off, not too much. Deeply overbought, no sell-off. Now we're deeply overbought again, and we have not had a sell-off. In fact, we're having a divergence. That is usually a bearish indicator. So here we have not broken resistance. Okay, we have not broken resistance, and we have a bearish indicator. Okay, and possibly we're going to get a reversal here. Okay, so we have what looks like a possible crossover on the signal line. So the actual signal for a sell-off is when the signal line crosses over and the histogram turns negative. So here we have the histogram still in positive territory. Now I want to just mark 2 levels on this, and I'm just going to do a quick mark. I'm going to do a vertical line. Here's a vertical line. So I'm going to mark 2 levels on this. Okay, so this is where the signal line crossed over, right here. So that's where the signal line crossed over. Okay, that's this crossover of the signal line. Now, where we are right now, it's very similar to where we were before the signal line crossed over. But notice there's a narrowing between the signal line. Okay, now also notice that while the signal line was still going up, the histogram was positive. We have a deceleration in the histogram. So the deceleration of the histogram and the potential narrowing or convergence, right? Because this is a convergence situation. The convergence of the MACD indicates that we are kind of getting exhausted to more exhausted in the context of coming into resistance on price. Now, I'm just going to look for an additional confirmation. The additional confirmation is looking at the QQQ. So the QQQ has this same exact pattern, except it's not deeply overbought on the CCI. Now the MACD has crossed over. Okay, the MACD has crossed over, and the signal line is kind of crossing back and forth. It's converging and diverging. We're going to have to see what resolves out of this. NASDAQ has been the leader of this rally, and it continues to be the leader of the rally. Now, one more thing I'm going to point out here, I'm going to put in a horizontal line here before I jump to some other charts, like taking a look at Amazon, is that we have, this is the resistance level that we're looking at here. The next resistance level on the Qs would be that one right there, is a minor one. And then here is another minor resistance level right there at 333. How ironic that is, 333 or 334. But these numbers seem to always be very, very significant as well. So we have a area of 2 levels of resistance. We have a very minor, shallow level of resistance right here. Okay, which we're not quite at yet. So we have 3 levels of resistance before we get to the major resistance level on the QQQ. Very similar pattern to the SPY, but the Qs seem to be leading the SPY, and I would be watching a break below that 50-period moving average. When price gets below the moving averages, the signal line in the MACD has already crossed. The CCI has already sold off. We rejected the sell-off on today's rally, but I would say next week is going to be pivotal. And I say it's going to be doubly pivotal because what could potentially bring down the markets next week is earnings season. We have the start of earnings season, and that's what we're going to look at next. We're going to take a look at Amazon AMZN, right? We mentioned Amazon had some really, really positive AI news. They were deeply oversold. Amazon really leading the charge on the markets on the way up today. That AI news received very, very well. Let's take a look at Microsoft. Microsoft also moving up strong, but I'll tell you that this chart is way more bearish. The signal line has already crossed over for Microsoft. The other big leader is always Apple. Apple, tremendously strong rally. This does look like a late or mature rally buy setup. So certainly all of our leaders are making nice. Let's take a look at Netflix, which tends to announce early. Netflix also similar pattern crossover. I mean, the MACD is very telling and very negative for Netflix. I think that's probably because, their earnings is one of the first earnings in earnings season. And so we've looked at Amazon, Microsoft, Netflix. Let's take a look at Google, right? Google or Alphabet also. I mean, they're a huge player in the AI space. This is almost a cup and handle on Google. So, the key level here for Google or Alphabet is what happens on this breakout. And again, this may break out prior to their earnings, but right now it looks to me like this is overdue for a sell-off. Do you see how the signal line is kind of diverging? Like it's making lower highs and it's making higher highs in price. We have a triple top, lower highs, and we may be rolling over to the downside. So very, very telling here on Google or Alphabet. This is one that might be, kind of on the verge of running out of steam. Now, I do love to take a look at GLD. Okay, I mean, gold is very telling. Gold just continues to go higher and higher and higher, regardless of what happens. It just seems like gold is on a tear and nothing will take down gold. And I think that is, again, a flight to safety. All this talk of recession means that it's probably going to be good for gold as people move their money into something that's a hard, real asset, a real asset class. Needless to say, things are all set in that regard. So we got gold. Now let's see what else we got. Last but not least, we're going to take a look at oil. Oil, we have a triple top on oil. Talk of recession is not necessarily good for oil demand. Now, I will say that an increase in oil price, and there has been a cut in supply from OPEC, an increase in a cut in supply in oil will drive up oil prices. That was the announcement, and oil has done nothing but go up since then. As a result, I think that oil is probably going to continue to rally. And, regardless of what happens in the economy right now, that slowdown in demand is probably going to take a long time, whereas the cut in supply is affected immediately. When OPEC decides to cut supply, price goes up. And that's pretty much what we're seeing here. We have a very strong crossover of the moving averages. The signal line on the MACD is continuing to go high. Yes, we kind of have a triple top and overbought on oil at a big level of resistance, but I would expect oil prices to continue to go higher. That will have an increased effect on inflation. So we might have a little bit more inflation next month, but we will see very shortly how the April numbers come out in about a month from now. So just about 1 month from now, we'll have the April numbers, and by then we'll know what happens with earnings season. So needless to say, a lot of interesting indicators, here in the markets and on some of the key stocks going into earnings season. I think that this earnings season is going to be very telling, for the direction of the economy. Usually going into summer, things are held together, but we'll see how things go as the summer winds to a stop. But earnings season is going to be key this year. So make sure you stay tuned for your upcoming newsrooms to keep an eye on how things go with earnings season. Needless to say, I'm going to switch to my other screen to wrap things up. Now, listen, I also want to mention that anybody who has any questions on Dash Trader, we do an incredible job every Wednesday. One of the guys here, either Wade or myself, do a tremendous free webinar on the Dash Trader platform. Not only that, we also are doing a live training session in New York at the NASDAQ market site where Jill joined us from today. We are doing a one-day class. I believe there's an early bird rate, and it's about $500. I'm not exactly sure the price, but we certainly will have a link, and that will be emailed to everybody who's on our database. So stay up to date with all things DAS by signing up for our monthly newsletter. Simply fill out the form at the bottom of the webpage at www.dashtrader. Certainly check out learningdaytrading.com as well, which is where we will have that class listed. But certainly you can subscribe to our YouTube channel at Dash Trader TV. And for the Dash Newsroom reminders, you can follow us on social media at LinkedIn, Twitter, Facebook, and Instagram. We have a class coming up on I think it's June 12th at the NASDAQ market site where you will be able to learn your DAS trader, get really, really proficient, really expert at your DAS trader with me and some of the rest of the team here at DAS. It's very, very limited seating. So make sure that if you do want to sign up for that event, sign up quickly as the seating is very limited. And stay up to date with all things DAS. Check out our social media. Thank you so much for joining us. Stay well, everybody. Stay well and trade well.